Hey there, if you're a new green card holder in the US and you've been wondering how to start building your wealth, you are in exactly the right place. We're going to break down US investing into simple, easy steps you can take today. Let's get right into it.
So, you've made the big move, you're getting settled in, and now you're starting to think about your financial future, right? The US stock market can seem kinda big and intimidating from the outside. But I promise you, by the end of this short explainer, you are gonna have a super clear, actionable roadmap to get started with total confidence.
All right, first things first, we've got to cover the basics. We're going to look at what a brokerage account is and the main types of investments you can put inside it. Once you understand these fundamentals, you'll feel so much more in control of your financial journey.
Okay, so what is a brokerage account? Well, to invest in the US, this is what you need. And if you're familiar with the system in India, it's actually really simple. Just think of it as your demat and trading account all rolled into one. It's just the account that holds your cash and all your investments. That's it.
So what do you actually buy in that account? Well, you'll hear a lot of terms thrown around like mutual funds, ETFs, and index funds. For our purposes, we're going to focus on index funds and ETFs. And here's the really important reason why. Their fees are incredibly low. I mean, we're talking fees that are often less than 0.1%. So for every $1,000 you invest, you're paying less than $1 a year. Over time, that's a huge deal. Just think of an index fund as a big basket of stocks. An ETF is a very similar basket, but you can trade it all day long just like a single stock. For long-term investors like us, they do the same powerful job.
All right, so our foundation is laid. Now, let's get to the practical part, the how-to. I'm going to walk you through the exact steps to get your account open and ready to go.
Your first big decision is, where do you open this account? Honestly, you can't go wrong with any of these big trusted names, Fidelity, Vanguard, or Charles Schwab. But for total beginners, a great tip is that Fidelity or Schwab are often the easiest to use, and here's the best part. They let you buy and sell a ton of ETFs with zero commission. Can't beat that.
Okay, so before you even sit down at your computer, just get these few things ready. You'll need your social security number, your US bank account details for linking, some proof of address, and of course your green card or another form of ID. That's pretty much it.
And the process itself? It's honestly so simple. You just go to the website, you click Open an Account, and you just follow the steps on the screen. You'll fill in your details, pop in your social security number, link up your bank account, and verify who you are. The whole thing from start to finish takes about 10 to 15 minutes online. It's that fast.
So once your account is all approved and ready to go, the last little step before the fun part starts is just funding it. You'll do a simple electronic transfer. It's called an ACH transfer from your US bank. That money usually lands in your brokerage account in just a day or two, ready for you to invest. Okay, the account is open, the money is in there. And this brings us to the biggest question of all, right? What do you actually buy? Don't worry, we're going to make this really, really simple and powerful.
The strategy that has become so popular for beginners and experts alike in the US is index fund investing. Here's the idea. Instead of trying to play the lottery and pick that one magic stock, you just buy a fund that owns a tiny little piece of an entire market. For example, you can buy one single fund that tracks the 500 biggest companies in the US. Boom! You're instantly diversified.
So here are the actual building blocks you can use. These codes are called tickers. They're what you type in to buy them. So you've got VOO, which tracks the S&P 500. There's VTI, which tracks the entire US stock market. You have QQQ, which follows the 100 biggest tech companies on the NASDAQ. And then there's VXUS, which gives you a piece of all the major companies around the world.
So how do you put them together? Well, here's a simple, really solid example of a beginner's portfolio. It spreads your money across the whole US market, the biggest companies, international stocks, and the tech sector. It's a fantastic way to avoid putting all your eggs in one basket.
And here's what that portfolio looks like visually. It just gives you a really clear picture of how your investment is spread out. So you're not just betting on one company or even just one country. You're betting on broad, global economic growth over the long, long term.
Okay, now we get to my favorite part, the most exciting part. Because getting started is one thing, but the real magic happens when you turn your investing into a consistent, automatic habit.
This right here is the absolute game changer. Every single one of these brokerage platforms lets you set up automatic, recurring investments. You just tell it, hey, every month, take this much money and buy these ETFs for me. You set it up one time and it just runs in the background, building your wealth without you ever having to lift a finger again. So what does that set it and forget it approach actually look like? Let's talk numbers. Let's say you invest just $240 a month. Assuming a pretty standard historical return of about 10%, after 10 years, that would grow to almost $49,000. A fantastic start.
But hold on, because this is where the magic of compounding starts to get a little crazy. If you keep that same $240 a month going for another 10 years, so 20 years total, your portfolio doesn't just double, it skyrockets to an incredible $182,000. That is the power of your money making money.
And what if you just let it ride for 30 years? That same little $240 a month contribution could lead to a portfolio worth over $500,000. $543,000 to be exact. It's absolutely life-changing, and it all comes from starting early and just staying consistent.
Just look at this timeline. It tells the whole story. You can see how the jumps get bigger and bigger and bigger over time. That's your money working for you, and then the money that money made starts working for you too. It's like a snowball rolling downhill, and your only job is to give it that first little push.
Okay, so let's bring it all home. Let's boil all of this down into a few final, crucial pieces of wisdom that are going to guide you on your journey.
One last really crucial point is to use special tax-advantaged accounts. If your job offers a 401k with a company match, that is literally free money. It's an absolute must-do. And another powerful tool is a Roth IRA. With a Roth IRA, your investments can grow, and when you take them out in retirement, it's all completely tax-free. These accounts are a huge boost, so definitely look into them.
So look, if all of this feels like a lot to take in, just burn these 5 rules into your brain. 1. Invest every single month no matter what. 2. Use simple, diversified index funds. 3. Keep your fees as low as possible. 4. Think in decades, not days. And 5, maybe the most important, when the market inevitably has a downturn, do not panic, stay the course.
So there you have it, the what, the why, and the how. We've seen that building a secure financial future isn't about some complex secret or about getting lucky. It's just about taking simple, consistent actions over a long period of time. Every great journey starts with that one first step. So the only question left is, what will yours be?